Today, I was literally going to place my Hail Mary bid on a position in Xela for the year. However, I was spooked by the delisting announcement from the NASDAQ. Hi again everyone, I hope you're all doing really well. So in an earlier video, I talked about how I was contemplating buying a small position in Xela Technologies, ticker symbol XELA or XELAP with the preference shares early in 2023. The thinking behind such move was that if the XBP Europe partial sale goes ahead for the approximate valuations given by the company, then the company may undertake a stock buyback and reduce some of the mountain of debt which they hold, which I believe would have a magnified effect at driving the severely beaten down value of Xela stock right up, which has lost an amazing 99.5% of its value over the past 12 months. However, today, when I was literally about to make the purchase, there came an announcement from the NASDAQ regarding delisting. The Xela board has since filed an 8K form today in reply, which captures the whole scenario and the Xela board's response. So let's have a look at what it all says. Again, as previously disclosed on October 12, 2022, the company received notice from the listing qualification staff of the NASDAQ stock market that the bid price of its listed securities had closed at less than $1 per share over the previous 30 consecutive business days, and as a result did not comply with NASDAQ listing rule 5550A2. Therefore, in accordance with the listing rule, the company was provided 180 calendar days or until the 10th of April 2023 to regain compliance with the rule. On the 5th of January 2023, the company received notice from the staff that the staff had determined that as of January 4, 2023, the company's securities had a closing bid price of 10 cents or less for 11 consecutive trading days, triggering application of listing rule 5810CA, which states in part, if during any compliance period specified in rule 5810, the company's security has a closing price of 10 cents or less for 10 consecutive trading days, the Listing Qualifications Department shall issue a staff delisting determination under Rule 5810 with respect to that security. As a result, the staff determined to delist the company's securities from NASDAQ unless the company timely requests an appeal of the staff's determination to a hearings panel pursuant to the procedures set forth in the NASDAQ Rule 5800 series. So here's the company's reply. The company intends to timely request the hearing before the panel, which will stay the delisting of the company's securities pending the issuance of a decision by the panel and the expiration of any extension the panel may grant to the company following the hearing. The company has been informed that hearings are typically scheduled to occur approximately 30 to 45 days after the date of the hearing request. The request for a hearing must be received by the NASDAQ Hearings Department no later than 4 p.m. Eastern Standard Time on January 12, 2023. There are no assurances, however, that an extension will be granted or that a favorable decision will be obtained from the panel. So in my previous video, there was speculation that Xela could get delisted at some point in the first quarter. However, it was not for solvency issues, but for listing issues, as they were not meeting the NASDAQ requirement of maintaining a share price above the $1 price point. And I dare say they have now even slipped below the market capitalization requirements, which was what the delisting rule was all about from the NASDAQ. It is somewhat pleasing to see that the Xela board has the resolve to challenge this. Obviously, you would expect this. Obviously, the board has the next play to save the company in the works, which is scheduled to take place in Q1, that being the partial sale of XBP Europe to undertake a buyback and reduce company debt. Obviously, it sounds like this hearing date could be some days away, so it will be interesting to see if Xela Technologies is able to maintain trading uninterrupted through this period of time. There is the real possibility of a market suspension in this time window, which is likely driving shareholders to flee the stock. So looking at all of this, there is a best case and a worst case scenario. The best case would be that the company is able to continue trading up to the panel date and receive a favorable decision from the panel. Considering this is a company that generates about $300 million in revenue a quarter and employs over 17,000 staff globally, and the fact that Xela board already have plans in place to hopefully return value to the share price in the works, they do have a good case from a sheer scale of operations point of view to remain listed for now. However, there is also the scenario where the company is unsuccessful and does indeed get delisted. It is worth pointing out that being delisted is not the winding down of a company, it is just the removing from the public NASDAQ exchange in this instance. The company is still tradable in an over-the-counter or OTC format, That is, provided your brokerage service can offer it. I have doubts whether this is offered by some of the digital fee-free brokerage services, but you'll need to clarify that. Anyway, there are issues with trading in the over-the-counter market, primarily that it is a much smaller pool of buyers as it is not being sold on a public market and can lead to having to trade the stocks for a lot less than they actually are worth. Though given the current Xela share price, you really can't be doing too much worse, can you? Now, one thing I am a bit unsure about in this delisting scenario is what will happen to the XLRP preference shares. This is my primary holding in the company at the moment, and this class of shares has actually continued to meet the NASDAQ listing rule, and in fact actually jumped up in trade today by 5%. Perhaps it was money fleeing from the regular stock to the preference shares for the dividend safe haven. Who knows? Will these need to be delisted as well, as they are an associated security, or will they remain tradable? I actually do not know the answer to this. There is actually another scenario I can comprehend playing out at the moment also, and that is Xela is able to get back on as a listed company via its upcoming XBP Europe listing, where they will sell off assets in the main Xela business into the new separate XBP Europe listing entity. Of course, this is all subject to this corporate move going ahead. It would be quite complex, but I imagine it could feasibly be done. Alternatively, Xela may seek listing on a smaller exchange than the NASDAQ. Such a listing, I think, is akin to the wild, wild west of the stock world. Anyway, like I said before, I don't think this is the end of Xela Technologies as a company, but it certainly could be the end of their life as a listed company. Being delisted stops a company getting access to the benefits of equity and debt raisings on the market, which can make it harder and more expensive to operate. So it is in Xela's interest to do what they can to remain publicly tradable and preferably on the NASDAQ. Clearly, this has made me think twice about my Hail Mary play. I suppose this is the reality of what I was in for if I was to follow through with it. I will further mull it over this weekend before I make a decision on whether or not to make the trade or not. It's still tempting, especially as the share price slides further down, but it is obviously a very risky decision, which I do not encourage anyone to take on lightly, hence why nothing I say here is investing advice. Anyway, what do you guys all think? Will this be the end of Xela Technologies as a listed company, or do you think they will live on to die another day? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favour. Cheers.